success equals process times consistency divided by iteration. And if you employ that to literally anything at life, you'll succeed. Literally anything. So for me, it's a case of working on myself outside the charts and just doing it consistently, having a process to follow and building discipline outside of the charts that you bring into the charts. How you do one thing is how you do everything. And the reality is a lot of traders come into trading from working a 9-to-5 job where they've got Timmy in the office telling them what to do. And it's very difficult when you start trading. You don't have anyone telling you what to do, right? You're your own loose cannon, and you need to develop the emotional control and stability to be able to control yourself, right? And that takes time, and there's no yardstick again, I often say a lot comes down to how your upbringing, what your past experiences is, to how quickly you develop as a trader and as a person. Some people crack it within 6 months. Some people it takes 6 years. It all depends on you as a person, how quickly you can essentially change yourself. So in order to become the person you want to be, you've got to change the person you currently are, and that's just facts. But the sad thing is most people don't want to change themselves. Go easy on yourself. If you're trading and you're starting, just go easy on yourself. Proverbial hamster wheel, you'll spin on it. You'll then start making money. You're going to lose a load. Then you'll start getting this peaks and troughs in your trading, and then you'll still have that rogue mental day that will happen every 2 weeks, and then you blow it all again. And it's at that point most traders quit. They make a load of money and they lose it all. You have no idea how close you are to succeeding. You're about 6 months to a year out from getting to the other side.
Righty-ho, folks. Here we are on Trading Up. We've got TradeX in the house. He's a 7-year veteran futures trader who trades ICT concepts, manipulation in particular. So you're going to get to find out how that can help your trading today. So welcome back to the show, TradeX.
Thanks, Cam. Appreciate it. Thanks for having me here.
And I say back to the show because we did actually record an interview a couple of years ago and I forgot to release it. So we're doing it completely over again. And you guys are going to get to find out how this guy trades. So to start off with, how did you get into trading? What's your background and how did things all start for you?
Yeah, I started about 7 years ago. I had a real estate business and transferred some money into a cash account. Back then, prop firms were... I don't even think they existed. So I traded cash accounts, trading penny stocks, and that's how I learned how to trade. Essentially, that was my playground. Traded breakouts, made good money, lost, and then obviously lost a lot of money as you do when you're starting out trading. But then just transitioned into options. From there, I wanted to benefit from the leverage, but was still just deploying the same approach, really. I was trading 15-minute opening range breakouts. But coming from a business background, my focus was always on how to minimize risk. And I always felt that my risk was enormous whenever I was taking these trades. And then I was fortunate enough to stumble across ICT really early on when he first came on the scene. And that sort of coincided when the futures market popped, with prop firms. And the two and two came together. I learned the principles of ICT and how price moves at a deeper level, and that was my key, really. And it's just been plain sailing from there. Develop my models and systems from there, really.
Yeah, it's interesting. So let's dive back into that journey. I mean, so you I know you were doing real estate, so that was your sort of bread and butter. I mean, were you still doing real estate and trying to trade at the same time when you were doing their options and penny stock stuff?
Yeah, I don't. Well, if you're from the UK, you'll probably be familiar with a company called Hargreaves Lansdown. So,
I've heard of it. Yeah,
I used to dump money into that and just hold tech stocks. So I used to just hold blue chips. So I'd do that on the side, but then I would, whenever I had spare time, I would essentially just try and trade penny stocks at the open. I'll just trade penny stocks with a large market cap. I'd wait for volatility on a new spike. I'd wait for a pullback, and then I'd enter and I'd long. But if you go back into sort of pre-COVID time, it was easy to do that. I always say, if you're trading in a bull market, trading breakouts is like driving a Rolls Royce. But as soon as you're in a bear market, it's not so pretty. So, that's where the whole idea of learning how to trade manipulation, because it allowed me to minimize my risk as much as possible.
Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
And so you're trading futures now. What markets on futures are you trading?
Predominantly indexes. I do look at gold, but I just stick to my poisons. I used to trade ES a lot, but NQ's turned into my go-to. I often see traders often trade too many, whether it's commodities or indexes. I find that it's a poison chalice doing that, because each one has its own personality.
Yeah,
right?
Yeah. And are you like are you kind of just a buy only trader, or are you looking for shorts as well? Okay.
No. So I short and long, but it boils down to what's my daily bias on the day, ultimately, and I just trade in alignment with my daily bias. And then if I'm proven wrong, then it's a lot easier to step away from the charts, right? If you're constantly being contrarian, going long, short, long, short, long, short, you can get yourself in a muddle. So I do my morning analysis, and then I create a daily bias, and then I trade in alignment with that. And I have my clearly defined levels. And if it breaks that, sure, I can take two opportunities at a trade idea. But if it violates that, then I know I'm offside. So what I can do is I can either stick to my governing rules, which I could explain those if you want, but I essentially have one more trade opportunity in a different trading session. But yeah, it's the easiest way to do it.
And it sounds like you obviously had to think about, what am I going to do to minimize risk, right? So that seemed to be the leading, I suppose, light in terms of how you got to where you are now. What was the thinking or the thought process around that? Like, I want to minimize risk. Why did you want to do that? It makes sense, obviously, but why did you want to do that? What made you think, I've got to actually do this properly? I've got to do it better than your breakout and retest kind of option where you've got a big stop loss?
Yeah, I mean, there's no question about it. Trading turtle soups is the pinnacle trade model. It's just incredibly hard to do it, because you have to remain incredibly patient to allow price to come to you. If you're overly aggressive as a turtle soup trader, you're in trouble. So I generally trade 2-3 times a day, right? And so naturally it suits my style of trading. I'm not a scalper, I'm a range trader. So I'm looking for, between 60 and 200 points on NQ is what I'm looking at. And I'm looking for a minimum 3 to 1R. But the principle of what it comes down to is the idea of perceived risk and monetary risk, right? So monetary risk is dollars and cents. It's how much money are you putting into the market? And so for me, I just want to minimize that as much as possible, because I know that risk to reward, right? If I have small risk but huge reward over a long term, that's going to give you the long term consistency. My win percentage almost becomes irrelevant if I'm hitting 5, 6, 7 to 1 R's consistently, right? If you're just shooting for a 1 to 1 R, then your win rate's got to be quite high, right? But with my average across the year, well, last year it was 5 to 1 R. I've got to be right only 20% of the time, and I'm not, right? My accuracy this year I'm currently at 65%, but I usually average around 70% a year, right? So that combination of huge risk to reward and good consistency is what keeps me. I don't care about a small loss on a turtle soup, for example, because of the stop so size. But perceived risk is the idea that, well, if you don't have a break of structure, if you don't have a change in the state of delivery that everyone loves to talk about, then your trade is risky. Well, my idea to you is, what is the risk? Is it the perceived risk? Is it the monetary risk? I'm a trader. I'm putting money into the market. I'm only interested in monetary risk. I'm not interested in perceived risk. And so my question to secondary traders always is, well, if you're waiting for your change in the state of delivery, right? So you're looking for your, whatever it is, a 2022 model, whether it's a inverted fair value gap, breaker block, whatever it is, right? Surely you are trading that entry on the basis why price has pivoted that very low or high, depending on the direction that you're going, right? So, right? So if you don't know why price is pivoting that very low, why in God's name are you taking that entry? Because how do you know why are you putting your stop there? Just because it's a breaker block? That makes no sense. That's, trading some cookie cutter, right?
Yeah, that's I mean, it makes sense to me, and I think there's probably some listeners out there who are going, "Oh, I'm completely confused with all these terms and stuff." But what TradeX is saying is basically he's trying to anticipate correct me if I'm wrong, but you're trying to anticipate the turn in the market versus waiting for confirmation that turn has happened and then getting in with a much wider risk. So having a tighter risk because you're going, well, it should turn at this point. If it doesn't, then I take the loss. But if it does, I'm going to get much higher R anyway, and my risk is much tighter. Much tighter than it would be if I waited for that confirmation, whatever it is, a break of the trend, et cetera, et cetera. So it's to get to that point is like that's expert level, because a lot of people do want to see that confirmation, and because of that confirmation, you do come in with the you're not going to get your 5, 6, 7 Rs every time or even regularly. So you end up getting 1 to 2s or 1.3s or whatever.
Yeah.
How did you get to the point where that was like the right move for you to go down that road?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
For me, it comes down to helping emotional balance, if I'm being brutally honest with you, because whether you're trading a cash account or whether you're trading prop, if you take a $500, $600, $700 hit, that you can spiral quite quickly if you do that 2 or 3 times in a row, right? Whereas if you're taking $100 risk, $200 risk, but you're making $2,000, $3,000 a trade, or maybe less, but in around that level, they become paper cuts. It's a lot easier to manage, right?
Yeah. So how did you work out that I'm now going to take paper cuts versus taking full on womps or whatever, slices of your skin out or whatever, some sort of gory graphic slasher movie. What got you to the point where I was like, I'm happy with a paper cut?
I don't know. I don't really. I think it comes back down to the idea of just what it is that I'm looking to get out of the market, right? Which is just small risk, great reward. And so, if I am entering on a turtle soup, right, which is trading the very manipulation, the very swing low, okay, I am taking that entry because that is my point, my very buck stop, my very low or high where I do not want price to go through, right? So if price goes through that low or high, I'm offside. I'm wrong. Okay. It's very easy for me to then step away from the charts and go, okay, no problem. I'll wait for a new opportunity. However, if you're waiting for a breaker structure, looking for a secondary entry, you can go through a breaker block. You can go into a Reaper. You can go back into the OB below it. How do you know where to place your stop? So for me, it's super, super easy because it's like I'm entering here and I have a fixed stop, which is between 6 and 12 points. That's how I fix my stop at between 6 and 12. It's just a case of cookie cutters. It's just a rinse and repeat. But the key is having to remain patient and waiting for price to come to you. That is the key element. That's
yeah, because I think there's probably another key element, which is the first time you did it. Because I'll be honest, I've tried this before and thinking, well, this makes sense. This makes perfect sense. You want to get in at the very start of the move, and I see it happen all the time. And I'll usually wait. I'll be one of these traders that will wait for the confirmation and then take the trade. So, but to do it when it's hit, it's hit a level or a line, whatever it is you've drawn in sand, you kind of know that that's reliable. It's probably going to turn. But to get in and have your stop and, sit through the fact that you're probably going to lose more than you win takes a bit of mental edge, right? How did you get to that point where that became comfortable, and did you have to do anything differently?
I think it just suits. It's whatever suits you as a personal trader. Some people prefer to have that confirmation. There's nothing wrong with it. I'm an aggressive trader. That's my style of trading. But I do it because of that. So okay, it's it's a case of refining my strategy and my approach to get it to where it is today. And the problem I see with a lot of approaches that are posted on Twitter or what have you is cookie cutter, right? Anyone can, copy and paste a pretty picture of a breaker block and say, trade this, right? But breaker block is only as good as the context and the situation that it sits in. Okay. And so that led me into going down the route of understanding and learning context. Okay. So context is more important than the trade itself. So I preach this to my students, continuously. Context before model every single time, context before the trade. Right. And so if I'm trading the very slow, the very swing low, the manipulation, that swing low is purely based off context and context alone. There's no specific model that is saying that specific low. I have 11 models. I've developed 11 models, and I can touch on those if you want. But
so assume, to get to that level of knowledge, how much time and effort did you have to put into what you were doing?
It's a process over 7 years. I wouldn't say it's not all ICT, but a lot of it is ICT, right? So, every trader says, how long did it take you before you became profitable? How long did it take you before you cracked it, right? There isn't a yardstick for anybody. It's just when, it will just click. A time will just click. So I don't know, I honestly can't tell you how long it's taken me, but, years to get to the level where I am. I've been trading for 7 years. So, but I can't put a definitive time on, so, 21st of March, 2020 is the day I turn the corner. It just doesn't work like that.
And it seems like a lot of people, they do struggle with the mental side of it, FOMO. You talk about patience. This is all about being patient. And especially being patient and then, waiting for that something that's going to possibly lose is quite a hard thing to do, right? So I'm being patient to then lose, 40% of the time, sometimes 30, whatever it is. There's a good chance of a loss, right? When you get in. How did you have any sort of the common, issues that people face, revenge trading, FOMO, that kind of thing, when you first started out?
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Yeah, of course. I'm like any other trader. But I think I've always lived by this quote, which I developed, which is success equals process times consistency divided by iteration. And if you employ that to literally anything at life, you'll succeed. Literally anything. So for me, it's a case of working on myself outside the charts and just doing it consistently, having a process to follow and building discipline outside of the charts that you bring into the charts. How you do one thing is how you do everything. And the reality is a lot of traders come into trading from working a 9-to-5 job where they've got Timmy in the office telling them what to do. And it's very difficult when you start trading. You don't have anyone telling you what to do, right? You're your own loose cannon, and you need to develop the emotional control and stability to be able to control yourself, right? And that takes time, and there's no yardstick again. I often say a lot comes down to how, your upbringing, what your past experiences is. To how quickly you develop as a trader and as a person. Some people crack it within 6 months. Some people it takes 6 years. It all depends on you as a person, how quickly you can essentially change yourself. So in order to become the person you want to be, you've got to change the person you currently are, and that's just facts. But the sad thing is most people don't want to change themselves, right? They're just happy with the status quo, and they plod on, they lose money, they tilt, they rage, they rinse and repeat, and they don't learn from the mistakes, right? But if you go back to that initial equation, which is success equal process times consistency divided by iteration, all I'm looking to do is continuously find minor improvements That's the iteration. And then go back into process, go redo my process, do that consistently, and then iterate it. And I've been doing that for years. But it's not just inside the charts, it's outside the charts, right? It's what you do outside the charts is as important. It really is. So things like meditation, eating right, taking the right vitamins, all these things, journaling when you first start. Every trader goes through it. Okay. And the one thing which I tell my students all the time is discipline is not something that you own. You never own discipline. Discipline is something which you constantly have to strive to, right? So you're only disciplined until you are not, right?
Yeah.
So you can't say I'm disciplined if you're not disciplined, right?
Yeah. Yeah.
It's a case of just consistently repeating a process and iterating it, and over time you'll eventually get there. And if you don't, the chances are you're not changing as a person. And that's just, and there's nothing wrong with working for somebody else, or there's people who make considerable money working for somebody else. There's absolutely nothing wrong with that. I'm not being condescending in any shape or form. But for some people, trading isn't right for them, and that's just being brutally honest. There's a reason why all traders look the same, talk the same, act the same, have the same habitual habits. It's not out of coincidence. It's because that's what it takes in order to develop the emotional intelligence you need to be a trader. But I'll finally touch on this. There's an amazing book. I don't know if I can touch on a couple of books that helped change my life. There's one of them is called Life of the Stoics. So I'm big into Stoicism. And the principles of Stoicism really, really helped me as a trader. And so, I'm not going to go into, all the different philosophers. I'll be here all day. I can give you a lecture on it. But just the overriding principle is you want to stay balanced, right? It's not being all too gung-ho, and it's not being all, let's think too much. It's about trying to stay at equilibrium. That's essentially what Stoicism is all about. Right. And so that's the way that I approach trading. It's the way that I approach life in general, is just trying to stay balanced. And with trading, what you have to understand is that trading is a zero-sum game. You're going to win, you're going to lose, and you're going to draw. And you can have an A++++++ absolute hook, line, sinker trade. And you're like, this is it, baby. Right. And that trade can lose.
Yeah.
That is trading. The moment you realize that, it actually becomes ridiculous to get angry. It's actually a stupid thought because you know that you can lose. Yeah. So why get angry? It makes no sense, right? The market is designed to feed off that tilt. So by you playing into that, right, and going into tilt, you're giving them essentially exactly what they want. So I come from it from a different perspective and a different angle. I'm quite resolute with it. I'm like, you know what, guys? Okay, you beat me on that occasion. Well done. You won the battle. But when that comes back to me and the market comes back to me, right? I don't chase price. But when the market comes to me, I will then execute. And I will take my bucket of water out of the ocean and I will move off to the sidelines, and I'll just rinse and repeat that. So you're not trying to fight the market. You're not trying to overcome it. There's trillions and trillions and trillions of dollars in there, and hundreds of thousands, if not millions of traders, right? Some of them is, the smartest traders in the world. So why are you trying to fight the market? It makes no sense when you know that you can lose, you know that you can win, right? So win, lose, or draw. Stay balanced, stay stoic, and just focus on your process and do it consistently, and then iterate it. And in time, you will find success if you stick it.
Brilliant. Brilliant. I'll tell you what, first of all, the quote is brilliant. I mean, that is absolutely gold. And I think a lot of people miss the iterate part of that. They try to do the first two things and they don't divide by iterate, which then means you actually kind of get stuck in that hamster wheel and you never really kind of get any further. I mean, you mentioned two books.
It's so funny. You put it on there. You want to get big in the gym, right? You want to get the physique you want. You want to get healthy, right? You follow a process. You do it consistently, right? Okay, fine. But if you want to improve, you've got to iterate it.
Yeah.
Right? So you apply that equation to anything in life, and you'll succeed.
Now you mentioned two books or a couple of books. You talked about the Life of the Stoic. What's the other book that you were
Jay
thinking of?
Shetty, Live Like a Monk.
Ah, right. I have seen that one. I think we may even have it in the house, actually. My wife buys a lot of books.
There's also The Monk Who Sold His Ferrari. As you can tell, I'm big into Buddhism, and I wouldn't necessarily say I'm a Buddhist, but I believe in the Buddhist philosophy and the Buddhist way of life and Stoicism. Those two things combined are absolutely gold if you want to crack trading, if you want to fast track your trading career, right? Buddhism, I'm not going to go into all of Buddhism, obviously, but the overriding principle of Buddhism is that suffering is caused by attachment, right? The moment you remove attachment, suffering dissipates. Okay. In trading, suffering is caused by your attachment to the outcome of your trade, right? And you're putting your ego attached to that. So, oh my God, I'm a losing trade. I'm awful. I'm no good. Oh my God. Yeah. Let's get my money back. Let's revenge trade, right? You're attaching an outcome to it. But if you just look at it as it is what it is, right? It's an opportunity to make money. And if it goes against me, cool, no problem. I'll just wait for a new opportunity. If it wins, okay, cool. It went in my favor. I'll do it again next time, right? Yeah. And that's it. But there's no attachment to it. Like my emotions are completely tied to trading. Like it's a life and death situation. And if it is life and death for you, I highly suggest you focused on an income and make trading secondary, right? But go easy on yourself. If you're trading and you're starting, just go easy on yourself. There's the proverbial hamster wheel. You'll spin on it. You'll then start making money. You're going to lose a load. Then you'll start getting this peaks and troughs in your trading, and then you'll still have that rogue mental day that will happen every 2 weeks, and then you blow it all again. And it's at that point most traders quit. They make a load of money and they lose it all. You have no idea how close you are to succeeding. You're about 6 months to a year out from getting to the other side. There's an amazing image of an ice picker. He's going through a tunnel and he's walking back out, and he's about an inch away from a pot of gold. And then the next ice picker comes down, takes one hit, and he hits the gold, right? And that analogy is so true with trading. You never know how close you are to succeeding. So what I suggest is just never quit. Keep going, and eventually you'll get there. But you have to find a system that works for you, and you have to find a system that resonates with you. Like I remember trading penny stocks, and I didn't love it. I remember trading options. I did it, but I didn't love it. As soon as I landed in futures, it was like this. It completely clicked. Whereas some traders who jump into my mentorship now, who the first thing they're trading is futures. I'm like, wow. You're either incredibly lucky, or you're going to go through a process of finding what's right for you, right? Futures might not be your vehicle. Options might be a better vehicle for you. ETFs might be a better vehicle for you, right? Long hold positions or CFDs or something. You might be a better swing trader. So I often think there's an element of trial and error when you first start trading. It's not about trying to put a circle in a triangle peg, right? You want to try and find where you fit, and you'll know. And when you do know, it's just a case of process times consistency divided by iteration. Just make sure that your process is a process that is profitable, right? Obviously, don't follow a stupid process.
Right. I'll tell you what, this is a fantastic and fascinating interview, because I think if anyone listens to the front half of it, they're probably going to go, oh, this guy's it's all about technicals, getting your understanding of ICT and all these concepts and all this learning that needs to be done. Listen to the second half and you'll be going, hang on a sec, who is this guy? It's all about mindset. It's the whole thing's about mindset. So if you had to give a weighting of is the first part more important than the second part, or are they equally as important? How do you do that?
Well, it's a horrible cliche, isn't it, that trading is 90% psychological, but the reality is it's the truth. But ultimately, you can't make money without strategy. So yeah, they are as important as one another. I often say you need 3,000 hours chart time before you can even contemplate finding success as a trader. Like, there's so many different nuances that go into every individual model. You just can't learn that within 3 months, right? And you'll learn that by making mistakes, and that's the proverbial hamster wheel, right? You're going to blow accounts, you're going to get frustrated, and all of that is just memory bank learning. It's great, it's awesome. Embrace it. Don't hate yourself for it. Just embrace it. And then in time, as long as you're working on yourself in the background, and you're not, because my dad used to say to me, son, only an idiot makes the same mistake twice, right? So I suffered with that a lot at the start, because I always used to have my dad bringing in my ear going, "You're an idiot. You've made the same mistake twice." But the reality is that in trading, you're going to make a lot of mistakes, and there's nothing wrong with it. You've just got to make sure that you're refining and working on what it is you need to do to get to where you need to be.
And if you're making those mistakes and you're finding it hard to make those mistakes and you can't actually live with it, then you probably need to work on your mindset a bit more, so you can. If there was one thing, and we'll finish it off here, if there was one thing somebody should start today to try and get that discipline, to try and get that patience locked in, what would it be?
I can't say one thing, because there's so many different things. I actually developed a 40-page PDF on mindset, which if you go rummaging through my Twitter, or if anyone reaches out to me, I'll send it to them. But it basically describes exactly how I built my mindset to how it is today. But there's basically 4 principles. There's 4 pillars that go into mindset. There's acceptance, determination, patience, and discipline. If you can work on all of those 4 pillars, eventually you will get there. And there's different things you do to work on each one, right? So for example, acceptance, you need to learn to meditate. So I meditate every morning, right? It's very simple. I don't do anything crazy. I just do affirmations, visualizations, 3 things that's going to make my day great, and so forth. And I box breathe, and I visualize how I want my day to go. All of that is subconsciously building patience within you, right? Because what it does is, there's a good thing in Buddhism where you stare at a lotus flower for 3 hours, and you're trying to find something unique within that lotus flower each time. It's a really hard study for monks to do, but the idea is to look at yourself from the third like a third eye view, and see yourself in that situation, right? Notice the sounds and everything that's around you. Now, you might think this is all woo-woo and crazy stuff, right? But the subconscious effects to that is palpable, because when you're in the charts, you clock yourself when you're getting tilt, right? You can see yourself in that third eye view.
Right. Yeah,
you're quicker to find acceptance. You can see yourself making those same mistakes. So the more you can meditate and be able to see yourself from a different angle when you're in your trading, will help you and get out of tunnel vision. But yeah, I mean, there's so much you can talk on in terms of mindset. But I'd focus there, and then just make sure you're exercising right and get the right vitamins.
So it's interesting. It's interesting you say that. Like, I mean, I think that's the first time anyone's been able to explain how meditation is beneficial to you as a trader, right? Literally, I've had hundreds of traders come on here and say, what do you do? What do you recommend? Oh, just meditate. And it's like, okay, great. And everyone kind of walks away and goes, right, I'll meditate, but why am I meditating? I don't understand why. What is the benefit of doing it? But you've hit the nail on the head there. It's awesome. Hey, look, to wrap things up, what's the name of your book? Because I'm sure people want to know.
Yeah, it's here. It's called Trading Futures. I don't know if this is actually recorded visually, but it's called Trading Futures: A Beginner's Guide by TradeX. It's how many pages? I can't remember how many pages it is
back
now.
to front on the camera here, so it's obviously the camera's flipped around.
Really?
Somewhere.
Yeah, it's 200. It's 186 pages of pure source. But no, just in case anyone is considering buying it, it doesn't go into any of my strategies or anything like that. It just gives an overview of the futures market and for people who are really elementary and stepping into that field. But yeah, that's the book.
And why is there a picture of a sort of Edwardian woman on the back? Just out of interest.
Well, I was trying to make it look cool and funky, So there's like there's a funky dude on the front.
Right. Okay. Right.
That's like the girl version.
Okay.
Yeah.
All right. Not
I think it looks quite good, But
Yeah. I could see it now. Hey, look, it's been fantastic having you on. What's the best way for folks to find out more about you?
Yeah, if you just go to Red Pill Trading, if you type that in Google, you'll find it. I'm TradeX across social media. I'm also TradeX on Instagram, Twitter, you name it, you'll find me eventually. But the easiest way is just go to the website, redpilltrading.com. It's actually redpill-trading.com, and then just follow the links and you'll be able to find me.
Brilliant. Well, folks, what we'll do is hook a link up to the show notes below this video in the podcast description. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one.